Hello and welcome everybody to the Beyond Banks podcast. This is where we talk to leaders that are transforming small business funding across all of the nation with all different kinds of technology. I'm your host, Jordan Hansen, and today I would like to introduce Craig Clark, founder of General Merchant Funding, who started as a telemarketer in 2008 and built a lending business that survived while hundreds of competitors have vanished. His unique approach to evaluating businesses beyond industry stereotypes and how automation technology is revolutionizing his underwriting process to evaluate thousands of applications monthly. Hello, everyone, and welcome. Today, I'm here with Craig Clark from General Merchant Funding. I'm excited. We recently started working together. Craig is a customer of mine, and I'm really excited to have this chance to learn more about him. One of the things I really like about Craig, not only has a really good haircut like me, we share the haircut, but he's also been in this alternative business finance industry for 14 plus years. Let's see. I showed that it was June of 2009. Is that right, Craig?
I actually started in 2008 as a telemarketer for a company in Connecticut. That's kind of how I got started off, and then I ended up getting started my own company in 2009.
So you did it for a year before, and I was like, okay, I can do this better. Like, walk me through that. How did that come about?
Well, at that point, the industry was definitely changing with the economy, the way the economy was shifting. The housing crisis came along, which impacted a lot of business owners. So it changed kind of landscape of the space. Back then, there was a couple of shops in the industry. Most of these shops were bigger shops, 150 employees plus shops. So in between that period when I was getting in, it was kind of the end of those the big shops. So they were kind of downsizing at that point slowly, and I seen an opportunity. I was running with it. So I went from a telemarketer to a closer, and as that company I was working for was on a downtrend, me and a couple of partners that were they're partners after the case, but people that worked there seen an opportunity to kind of go off, and we went to a basement and started a business out of the basement at that point.
And that was in Connecticut as well?
Connecticut, yep, Newington, Connecticut.
So now a lot of the companies in this space, they're in New York. So how do you feel about your choice? Why Connecticut over New York?
Well, at that time, there was only, like I said, there's only about maybe 3 or 4 real big shops. One was in Connecticut. There's another one in Georgia. There was one in New York, and I think another one like in Texas around that time. So it wasn't a lot of broker shops to say, because there was only a handful of lenders. So at that time, there wasn't all these funders or said broker shops in New York. There's a couple of lenders in New York, but most of the funding shops were outside of New York at that time.
Got it. I see. Now, you said 3 big players. How many big players would you say are right now?
Big players, I'd say there's probably about 15 to 20 big players, individual classes of credit. But back then it was only 3 that covered all the credit spaces.
Well, it's a lot bigger now. This space seems a lot bigger than it was then. Why do you think that is?
Really, the mortgage crisis. If you want to get really down to it, the mortgage crisis hit. A lot of the brokers came out of that space looking for something else to do. They came into the MCA space, and at the same time, business owners they didn't really want to take money. They didn't want to take that risk of taking on debt. So there was less funding going on, but more brokers coming into the space. So these big shops had to kind of collapse. And a lot of the people that done well at the big shops started their own broker shops, which kind of spread the shops across the United States, a lot in New York. Also at that time, there was only first position deals. So if a business owner got a merchant cash advance, because back then it was off the credit card splits, there was no daily payment remittances as they have now. But there was only one position that you can get, and then there was one.
Can you clarify for the people that aren't? Let's say they're just a business, yep. And can you clarify what first position is?
All right. So what that means is if you get financing for your business, the first lender that decides to fund you, meaning you have no other similar product at that time was a credit card split deal, but in this day and age, it's daily payments. If you only have one lender in there, that lender is going to underwrite the deal as if there's no other similar debt on that business. At this point, now you can get one lender to come in there, advance you money. If you have that, you're not forced to refinance the deal. You can go get a second lender to come in and give you financing behind first lender that gave you financing.
Is that what they call stacking?
Yeah, so stacking positions, multiple positions, yeah.
Got it. So anyway, we're going back then. It's grown a lot since then. You think it's largely because of the mortgage crisis, the brokers kind of left and they went to a different space, and merchants were hesitant to take money, but it's obviously grown since then. They're taking money now, like they're using it a lot. So Why? What's the shift? Why do you think that is?
One, the product's more common. Back then it was really educating people that you can, get money based off your future receivables. It wasn't a common concept back then. So there was a lot of education there. So now the business owners are more aware. Also, there is more options. Back then, a lender would have to go to a hedge fund typically to raise the money to become a funder. At this point, there's a lot of micro lenders, I would say smaller lenders out there that have been able to raise money through family, friends, and so forth, and overnight become a funder and provide different types of financing, whether it's, as we talked about earlier, stacking, second, third, fourth, fifth positions, whatever the situation is. That barrier of entry into this industry is a lot easier than it was, and mainly because of knowledge, but also easier access to capital on the lender side, which actually in turn offers more capital to business owners and makes it more aware because there's more brokers in the space having conversations with the business owner.
Got it. And again, 14 years, 1 month. Are you going to do anything special for your anniversary here? I mean, I guess you just passed it. So 15 years coming up next. You got to be proud, right?
Yeah, definitely proud to, be in this industry. I grew up in this industry, just to be frank. I never knew finance or anything about really finance before I got into this business. So being able to do this for as long as I have, being able to help as many business owners that we have, and then kind of see the changes, of how the industry has grown, has been a great thing to see.
Now, how many have you seen, like shops similar to yours, shut down?
I mean, I can't even count, to be honest. Like I tell people now, I can't even count. Right now there's hundreds and hundreds of lenders that are out there. I can't even put a number on it because there's new ones popping up every single day. But from back then, I would say, let's say 2008, 2009, and don't quote me on this, but there's only maybe 3 or 4 lenders that are from that time period. Now there's underwriters and some people that have maintained, but even that group of people, like when we go to the trade show, we all know each other, and it's usually like 10 to 15 of us at max that are seeing each other like, hey, remember you from back then, and so forth. So I've seen a lot go out, not really reading the market right.
Yeah, and that was my next question. How have you been so successful where so many others have failed?
I'm just a long-term play type of person. My goal was never to say, hey, I'm trying to get rich overnight, just on this product and go do something else. Back then there was a lot of people that didn't believe the industry would last this long, maybe because how I grew up and where I grew up, I knew already that once I got into the space, there was a lot of business owners that didn't have access to capital. Plus being a telemarketer, I think taught me a lot too, because I was having that conversation so many times a day with people. So I knew that there was nobody that could actually fill in that gap. There was nobody going to come in and, save these business owners and that couldn't go to a bank. And there was a lot that couldn't. So I had a long-term view that market was always going to be there. So everything that I put in place was never, I'm rushing because I'm trying to get out, or I'm rushing because I'm trying to, do something different. It was, to sustain the ups and downs of the economy when they come, kind of foresee those things coming and making the adjustments before they came. But that has made me successful in my own right, just because I'm not trying to get something done tomorrow and then say, hey, I'm done with it. I'm looking long term with this.
Yeah, that's awesome. One thing I'm fairly new to the industry. I didn't even know anything about it 18 months ago. So as I built this product, I've learned, and I've gone to 2 broker fairs so far, and I met a lot of awesome people. And one thing that's been interesting to me is I found that every funder, every lender, they have businesses, industries even they prefer to work with. What would you say are the ones that are the best fit for you?
Well, there's 2 ways to kind of look at it. I would say if I'm looking at it from, what performs the best based off how I underwrite, I come from a different underwriting era, it's going to be based off the business owner side. It's hard to say industry. It's more of a business owner that really understands their business and not just kind of operating the business. Over the years, have I seen certain ones? Listen, restaurants used to be great a long time ago. They're not great today. Medical deals are ones that a lot of people have, any type of medical industry. But, depending on the subsets of the industry nowadays, it's not. So I don't like to pin it on a specific industry when I'm asked that question. I like good owner operators that understand cash flow, understand what they're using the funds for, understanding the product they get in, and also are, just realists. We like having conversations with our business owners during that underwriting process and having a real conversation. Those business owners typically perform the best.
I see. So it really is that difference of you want to know someone who's in there, they understand cash flow. They're not maybe less dreamers and more, they have some solid understanding of how business works. Yeah. And their business specifically.
Definitely. I'll give you a quick example. Yesterday, I was talking to a business owner. Right now, used auto dealerships are not doing well inside the United States for numerous reasons. They're restricted with, I would say, 90% of the lenders in this space. We're still funding those businesses. We're looking for good owner operators. Talking to a guy yesterday, I want to say he was in Tennessee. But after the conversation, I found out, his dealership is like going into Jay Leno's garage. That was his concept. You're going inside this building that's, cooled and, there's chairs, you can get popcorn. He made an experience. Most of his customers are not in his state. They're out of state. He's picking certain cars and he's doing very well at it. So, he was looking to borrow money for an opportunity to continuously grow, and he has the margins and he's showing that that's the case. So, finding that subset, initially reviewing that deal without talking to the business owner, we gave one offer. After I talked to the business owner, we modified that offer, gave him better terms because what he's doing in his market compared to some others was just totally different. And that's the type of business owner we're looking for.
That's awesome. That's a really good example. I appreciate you sharing that. And then finally, we met. And actually, I think I saw you, or you had registered a business. Anyway, somehow we stumbled upon each other, and I'm grateful for the relationship we have now and that you're a customer. That's awesome to have you. But I would love to learn more about how your integration with Cobalt Intelligence has helped your underwriting process. Can you speak more to that?
Yeah, definitely. So, our main goal, especially this year, is to automate the system and increase the efficiency of the system and speed up the system, which is really just the experience that the business owner is going to have, applying with us for capital. And most of the time, it's time. Time is one of the biggest things that, people have, and time is most important asset here. So what we're able to do was build a system that automates a lot of the pulls and things that we need to check. One with Cobalt is checking the Secretary of State. Before using your system, it was a manual process. If somebody's in California, you got to go to that site, look it up, get the information, cut and paste and so forth. And you have to do that for each individual state. That entry is looking at hundreds and hundreds of files a day. So it's just a repetitive process that you're doing that's taking up additional time. So, on that note, we was able to, API that into our system. So now that's an automated process. As soon as the file's entered, the system's automatically pulling that information. It's not a manual process anymore, which speeds up. It sounds like it's little, but that could speed up, a minute on each individual file. So when you add that up over thousands of files in a month, you're getting a lot of time back, which, speeds up the process. You also have some other features that we were able to use where we can verify the EIN in real time. And that's the federal tax ID number. Having that as an automated, and, there's other ways to do it. But again, it's a manual process that you would have to do that in other ways. Having that makes the deal or file a stronger file right from the door. We know from the door we're dealing with a verifiable business, and that tax ID number is going to match up to the actual business. Something that a lot of companies don't really check till the end of a file, which means you could have put a lot of manpower into a file and come to find out it doesn't work. So, and then we use the judicial side of your system as well, where it checks the court cases in particular counties. That's another one that is a lengthy process. It actually takes longer to do that than checking the Secretary of State manually. So when you look at those three pieces that normally, somebody in the data entry team had to go to the website, find it, search, manually look at that, you're probably, and I'm just probably giving you the best case scenario, let's say it's 3.5 minutes or 5 minutes, right? That's a lot of time on each file just to make sure that file is good to go through the rest of the process. So by getting that, integrating your system in, which my guys found it very simple to integrate that system. So the setup time was quick as well. It didn't take us months to get it done. It sped up our system quickly, more efficient, and the information we're looking at, we know we can trust.
Awesome. I appreciate that, Craig. Well, Craig, I really appreciate your time. This has been fascinating. And, I wish you the best with General Merchant Funding. You guys have been a great business and a great partner. Thank you.
Thank you.